Jonathan, the key question is oil being an emotional market, so that, I'm not surprised by the swing, because the run up to 85 was so quick and fast that, the retracement has come in as quickly. My only question is, how structural is this? Because it seems like the market is reacting to the Saudi energy minister's comments.
Yes, good morning. Look, the market has reacted. Saudi Arabia has said that they would meet capacity. I think one gets a bit of a hint as perhaps it's got to do with what's happening with Saudi Arabia and Khashoggi, where the US and Saudi Arabia got to head and they basically said, well, look, Saudi Arabia, you have to do the right thing now. You have to supply the market. And with you supplying the market and perhaps a little bit of turn on some global economic news, then prices come lower. I think if anything, the prices at 85 were too expensive. It's good to see prices come lower and back in a range, and probably anticipate prices to continue to come off from these levels.
So what is the right level for crude? Is it 85 or is it 75?
75. I think when you look at it at 85, we have concerns on economic growth. We've seen the market up there. And note also, when the rally happened, it was happened as a consequence of news that we knew. But we also knew that the levers to releasing oil were already there but weren't used. So the rally we've seen, I think, was pretty much on hearsay and pretty much, I think, a little bit hollow. And that's what we've always said. So it's nice to see prices come back. I think the real price should be between 70 and 75 for Brent.
So, Jonathan, what's the range that you're looking at currently for crude? I know you're calling this a big directional change. Perhaps that could be a trend in place. What's the new normal then that we're looking for oil for, say, the next 1 month?
I think when you look at it, and let's take a step back as well. Brent's up around about 30% on the year. We've had about a 6% correction here, so it is under pressure. So even if oil comes back, to that mid-70s or late 68, it's still within the range that I think the market would cope. I think economic-wise, I think having a price of around that 65 is something which benefits everybody involved, as well as the consumers. So I think the aim would be to try and get crude where it benefits all. At 85 it doesn't, at 45 it doesn't. So somewhere in the middle, I think, is the bifurcation point for the market. That to me would suggest prices more like 65 and 70 coming over into Q1 next year. Maybe even we have a dip over the next month or so.
Okay. Jonathan, thanks very much for taking out the time to speak with us and help our viewers understand the oil story better.